the emergence of protocol-owned liquidity as well in the DeFi space is very exciting to me. Where the liquidity currently, like on Alcor, for example, like I own potentially, like I could own, let's say, 70% of the liquidity for a specific token. And then that means that I could also pull that liquidity at any moment at my own whim, fucking over anybody who's trying to trade that asset pair in the process. If instead of me and individual potentially whales owning liquidity positions across tokens, the protocol that issues those tokens can own its liquidity on itself, meaning that in a time of negative price action, there isn't anybody on the liquidity ownership side of this who was going to panic pull their liquidity from the pool, reducing the available liquidity for the market to trade against, even though the market's getting volatile, because that liquidity is owned by the protocol itself, and protocols don't panic sell unless you script them to, which I guess so they could. But yeah, let's dive into some crypto tech. Not that we're not already pretty deep into it at the moment, but
yeah, I'm gonna make some coffee real quick.
Yeah, I'm gonna start by pulling up TradingView. And then I'm not looking at my screen, so I'll have to rely on Mark when he gets back to let me know if people have questions or direction to go into. But otherwise, I'm going to go into DeFiBox. So I'm going to go TradingView, click the little drop down, go to charts. Once I'm on charts, it knows what I want to look at because I was here. Oh, I was looking at the wrapped Ether and Ether Wax E pool. This is the Uniswap pool on the weekly. But yeah, let's look at Bitcoin. So you can type in.
Yeah, I do find all the, all the people, like you see it all the time, just kind of run out in news articles where when Bitcoin's up, you see those articles like, oh, cryptocurrency is the future. Look at all these cool things. And then Bitcoin goes down. It's like everyone knew it was going to crash.
Yeah, so, you idiots. What are you guys doing buying Bitcoin?
The more you can educate yourself, the more you can inoculate yourself to all that noise on the side, and kind of teach yourself how to fish here because, Bitcoin after like its loss, I think it's gone down like close to 20 some odd % in the past like week or two. It's still at an all-time high for the past year.
Yeah.
So, like last year, it's still significantly higher than it was before. So, when in doubt, this is a very simple thing, but it bears repeating just for sanity here, is that, when in doubt, zoom out here. You're making higher highs and higher lows that even when it's low, it's higher than it was before, which tells you where the trend is. And
we're not even hitting the low of this current bull run. Like look, right now we're at this green dotted line and we could go all the way down to here and still have well, I guess we could go all the way down to like 30,000 and still not be making lower lows, since it looks like we dumped all the way to, I guess we wicked all the way down to 29. It's certainly possible to continue to bleed, but here we're looking at the Bitcoin price. We're well below, pretty much bouncing on the like bottom line here now pretty hard. We're oversold on the RSI on the daily, and the OBV is still, so this is on balance volume, it is kind of trending down still. So ultimately it's still a downtrend, but we're certainly on support now with Bitcoin. I'm expecting to see this probably just range here. You could see it in the next few days probably going between 35 and like 41,000, which is around the middle line here. As far as if it doesn't close above 41,000, that's not news to me in the next few weeks here. So what I'm looking for is for Bitcoin to close below 35, and I'm short again. And if it closes above 41, that would start indicating a reversal in this downtrend. But right now we can see this is similar, like on the chart, almost like here, where we're also very volatilely dumping even harder earlier. You see these big long wicks here, or big long candles, then kind of recovering. And even though here we're also oversold, also looking like similarly on the RSI here, we did still just kind of like range and then continue to bleed down.
And you can see some of the, like when Sid or Max start talking about retests, it's when it's like, below this middle B bands indicator, but it kind of ebbs and flows underneath, but never quite breaks that middle line. And so you can see it starts retesting towards that middle line, but doesn't quite breach it. And then it continues to go down. So that's where you kind of get like false indicators that the market's starting to come up.
Yeah,
but then when it breaches that threshold, then you could have some indication that it may be a trend reversal.
Yeah, for that type of day trading, I like to look at the chart at the 4-hour length here instead of the 1 day. So this is for like shorter term retests. So here again, you would see like we're closing above the B band line on the 4-hour. Like maybe if you're trying to trade short term, like within a day or two range here, or maybe a week, going long here would have been a move and you would be in profit right now. But the risk, or the reason I haven't tried to go long here, was okay, the 4-hour is starting to look good. How does that look on the daily? Okay, it looks like we're probably not, like, we're not anywhere near the middle line. We're still kind of down here. We are on support. Like, this candle has started to level out a bit. We are oversold. So it's like, okay, maybe it is going to either stay here or kind of correct a bit. Maybe I do want to go long a little bit. Let's look even further out on the weekly. Each one of these, when I change it, it changes the duration of one candle. So now one candle represents a full week. So this is 1, 2, 3, 4. This is a whole month here, just these 4 candles.
I'm going to start a Stream Raiders real quick, y'all. So like,
yeah.
Anyway, if you want to join that, it'll post a little link if anyone wants to do Stream Raiders with us. So anyway,
I'm going to kill the B bands really quick and just look at the Bitcoin chart here. The weekly is also still not starting to level off yet. You can see here, it also similar large candles. This candle here is called a doge, where you have a wick on the top and on the bottom, almost the same length with barely anything in the center. This type of a candle tends to indicate a trend reversal. Here it failed. Here you see another doge and it did change. It did start pumping up. Here's another one and it dumped. So very not consistent indicator to go by on the weekly chart here. Maybe we find doges on the daily chart and we can see if those hold intact more often than not. And we're not really seeing much here. Yeah, it's not been that volatile in that direction. That's more of a, like, new markets have those types of indicators a little easier to follow, but I tend to just stick to the Bollinger Bands. So if you wanted to add this indicator, the one I'm seeing here, you can do that on your own graph too if you're following along by just clicking on the effects button, which is, I think, your indicators and markets. If you click here, and then in the search, just BB Bollinger Bands, click on that and it'll add those lines to your graph as well. Another cool thing I might mention is a lot of what we're doing here on TradingView, people don't realize that TradingView is kind of the backbone of a lot of trading applications. So for example, if we go over to Alcor Exchange and look at like the Wax and Tether market, this graph is from TradingView, meaning that we can do the same stuff here. So you can click indicators, type BB.
Oh, is that like an API directly to TradingView?
Yeah, this is just TradingView. So there you go. Now I have my B bands on this chart directly in Alcor. Like, do I want to see also, let's see, is the like RSI? Let's see. RSI, relative strength index. Let's see, is it overbought or oversold? Let's add it. There it is. And it's not going to plot the RSI because of whatever the API is that this is pulling the information from isn't able to convert that, which I guess makes sense because Alcor is kind of an underground exchange. Either way, this type of graph display is almost always an API into TradingView because it works really well. And that means you can add these indicators on your favorite trading application. You don't have to go to TradingView, chart your stuff here, and then go back to your application. You can do it directly in your like directly here on Alcor, like for example. But yeah, so right now it looks like Bitcoin might be done dumping for the moment, I think. I do think we still have room down to possibly 30,000. And I'm expecting, based on a macroeconomic picture that I keep track of, I expect the Federal Reserve in the United States to announce non-favorable rate increases on their meeting on Wednesday, tomorrow. So I expect fuckery in all equity markets on the back of that news, because that would be the fourth planned rate increase in the United States by the Federal Reserve this year alone. And those rate increases will make it harder basically for people to get cheap money, for wealthy people to get cheap money. And that would mean that then, to get money now more easily, you dip into your equity positions and sell out there. And that's why that I expect that to like ripple through these markets in the very short term. So Wednesday, I'm thinking we see some volatility. I'm not sure which direction, but definitely something dramatic, probably down, because I don't think the news will be favorable.
Yeah, I feel like, and correct me if I'm wrong, Max, but I feel like, like obviously these news does ripple on the markets, but I feel like it's kind of twofold. Like you have these trends and indicators of where things are trending, and then news is kind of the catalyst that sparks it. So they kind of go hand in hand. You have what you're seeing in the charts, you have the trend that you're seeing indicators for, and then it's the news that kind of is what could set up or spark a large trading volume that just continues that trend in a more accelerated fashion. Like we were talking about with Wax a few weeks ago, or like a month ago, I guess it was a couple months ago, where like, it looks like Wax is kind of trending up. There's a lot of good indicators here. And then like that Amazon news about them picking up that Dibs platform, and that just spiked it. So there was already good sentiment there, but that's just what sent it to the next level. So I would say like don't trade based purely on news. It's an additional indicator, an additional tool to build into the total picture.
It's also this to an extent there's a self-fulfilling prophecy aspect to these types of news, when it's like, oh, if the Fed announces this type of news, then that should make the markets go down, and because it does, because people react to what should happen.
It's like confirmation bias. Yeah
exactly, which is totally normal. Here we're looking at Ethereum looks way less like it's bottomed. You don't even see the green yet here. This looks like it's still on the way down. I want to see Ethereum hit 20,000 flat, and then I think it can still, like, even from this last low, you could get to like 1,500 still, and it looks like
how does that look as far as where the is that still
main, I feel like 1,800 you'd be lucky to see it go below.
So look at the chart, like 2021, look how low it is compared to like 2000. Seems like a huge dump to me, right? But if that's where this line is, I'm pointing with my cursor like people can see it. They can't. But look how low it was literally a year ago.
In December, we're looking at $600 in Ethereum. In 2020,
even though 2000 seems like just pennies on the dollar, just remember that it was a third of that, no less than a year ago.
And a big part of some of the gains that we do see as traders in this space, a big part of like getting a 1,000% return from an investment is being part of insane volatility. Like you can't expect 1,000% return without crazy volatility. Like that it doesn't happen. Those numbers don't
on the news piece real quick, DNA, you make a really good point. I think traditional like chart reading and incorporating news into how you expect trends to play out, it is pretty strange. I mean, I do think the news that we're getting these days with potential war in Eastern Europe, with COVID-19, there's a lot of just unprecedented news going on to a level that we just really are not familiar with in the last 20 years. So I do think that is something that there's a certain point where like it's going to be a roller coaster ride no matter what, because new things are new.
Yeah, that's the other side of this. These markets are not like a new stock or a new like company on the like NASDAQ exchange or whatever. This is like an entirely international network. It's basically like the way I would explain Bitcoin to somebody is Bitcoin is it's money, it's the Federal Reserve, it's the auditing system, and like it's all of those things. It's not just the money, the digital money, it's also the reserve, it's also the auditing layer, it's also the network that you transact that money on. So Bitcoin on its own is the same as the entire legacy financial system effectively.
I do think that's kind of an interesting
that just doesn't exist already. Like you can't be like, oh well, how do you price this? What's the market cap? Like I don't know, what's the market cap of the US dollar? Like, does that include all the equity on the stock market, all the house values in the like retail like sector, like any of that?
I find that
you can't put a market cap on it because it's not a company.
And I find that argument, it's a little off topic, but the argument about climate impact of Bitcoin versus traditional banking doesn't incorporate the fact of all the variables and the systems that are in place for traditional banking. You know, the offices that everyone works in, the cars that are driving to take cash to ATMs, to, you know, all of the employees that are involved in this thing. Whereas like you said, with Bitcoin, it is it distributes the money. It is the protocol layer. It is the Fed layer. You know, is like the regulation
it's
layer.
everything. It's
all
not just
the things
the money
in one. So if you're thinking of the total impact of the electricity to do the entire Bitcoin market versus the entire traditional finance market, I feel like a lot of the data that comes out doesn't encapsulate that very well. But you know, that's just a quick aside here before we go down another rabbit hole.
I agree with that too. It's also like you're not factoring in, you know, like it costs a lot to run a Bitcoin mining operation, but like I'm pretty sure it's not cheap to run just the lights alone at the US Bank building downtown LA. It's like a fucking 80-story building that's mostly banking gets done there. And like that also, you know, that doesn't seem to factor in. What about the data centers where all these like informations for the stock market is stored? How much does that like, sure, it's not as much as like a Bitcoin mine, but that plus the US Bank building, plus all the other shit, like, I don't know, like it's not a fair comparison again. Cause you're not, like, it's like, I feel like gold mining alone outpaces what Bitcoin fucking mining puts out. And again, the core of the argument suggests that you can't generate electricity with renewable sources, and you fucking can. So why not just do that? And then who cares what you're using the electricity on?
Yeah, exactly. It's a false premise of an argument, really. So, but anyway, did we want to put the DeFiBox or?
Yeah, let's do that. I just wanted like the last take on this is like I'm a little unsure of the market right now, so I have closed a few of my like short sentiment positions. Like I was, you know, expecting these markets to dump, and I prepared my portfolio for that, and they have dumped pretty aggressively at this point. I think they can dump more. I'm not sure of the direction at this point, so I've pulled back into cash, and I'm waiting for this confirmation now. And that's what I was saying earlier, where like I need to see a daily close above a certain price or a daily close below a certain price before my sentiment is confirmed again. So for me personally, obviously not financial advice, that's what I'm seeing is like I could see these markets go either way. I do think like now we're looking for further indicators from like news and other like sources at this point, I guess. But it is also a different market than it has been in the past. We have institutional money in these assets now. When you see the market dumping, look at who's buying. I mean, it's not fucking like degenerates like just me and Mark over here, but nation states like El Salvador are buying millions of dollars in Bitcoin as the prices is collapsing. And central banks are speaking favorably about this stuff. This isn't something that should scare people out of the space entirely, but I think the takeaway should be understand that this is a volatile market. It's a risky asset, and you need to prepare for any scenario, not necessarily plan for a price direction by trying to predict what's going to happen next, but take a look at all the information, process that into a plan for what will you do personally with your risk tolerance should the price go to X tomorrow. You know, X being up or down, whatever it is, like having a plan. And that should be the takeaway from all this kind of like, because at the end of the day, the reality is nobody knows what happens in the next 2 hours or in the next like 24. Or
you can't time the market, but you can have a plan, and and a plan that and you can execute the plan, and so that gives you the specifics and the expectations of a very volatile and strange market. So
and it'll help.
If you're trying to time the market, you're going to have a bad time. If you have a plan, you know exactly what's going to happen because you're in control of that plan.
Exactly. And that's the difference. In my opinion, I say that often, that's the difference between being an investor and gambling in this asset class is investors have a plan, investors follow their plan. If Bitcoin does whatever tomorrow, what are you going to do? Well, let me tell you, because let me just check my plan. Oh, if this happens, this is what I do. I don't need to like make this decision in the moment when I've watched my portfolio just lost 35% of its value. I'm not thinking fucking straight. I don't want to have to make a financial decision when the charts are that red and I feel the emotion that comes with seeing that loss. So make that plan before this happens, and then you just follow through, and it feels a lot less stressful, and it's, you know, and you can sleep soundly even though you have a position in an asset that most people are laughing you out of the room for believing in, potentially.
Yeah, it's a marathon, not a sprint, like I said.
Yeah.
So, you know, trying to just make consistent calculated moves to keep your stress and anxiety based on these things in a controllable space and not overextending sets you up for success to be able to finish the marathon.
Holy hell. Okay, so I'm gonna go into DeFiBox. I started doing this yesterday to try to see like what kind of yield can we make here.
So for context, DeFiBox is a decentralized exchange protocol on the EOS, or it's on the EOS and Wax networks, correct?
EOS, Wax, and what's it called? EOS, Wax, and Binance Smart Chain.
Oh, nice. Okay, so you know, we've been doing a lot of DeFi stuff on the Harmony chain and on Ethereum, and so this is one, you know, since we're all have Wax assets and Wax NFTs and Wax coins, that this is the EOS version of some of those things, and so we're kind of going over what it has that's similar, what it has that's different, and you know, we all have Wax assets, so maybe we can funnel some fun stuff into this.
Yeah, so here's the DeFiBox's homepage on the EOS website. I haven't used it on EOS, but I've talked to a few people in the EOS community who have been using it and seem to be pretty happy with it, which I like to hear that there's actual people. If I'm reaching out and someone's like, oh yes, I'm familiar with DeFiBox, I've used it, that's kind of already a good thing.
Yes, I mean your first step, I imagine, if you're going onto a new decentralized exchange, is to get a general sentiment on the security, because your biggest concern right off the bat is smart contract failure. Like,
am I going failure or malicious smart contract exploitation?
Yeah, or some sort of malicious actor that's trying to steal your shit. You know, is this a reputable site? Does it have audits? Is there a community? Within that community, are there people that, you know, that you trust, or can people that you trust enough with a big community of people that say the same thing, that give you confidence that this isn't going to, one, steal your money, or two, accidentally lose your money?
Yeah. So first, the things I looked at first after like reaching out to the community, waiting for like a response, was then coming over here to their documentation and seeing what they write in their about section. So you have like their white paper, which is actually kind of like updating several times here, but it's quite condensed. Like I think it stops. It's just the orange ones. So any of the other ones, here's like 5.1.1. So token issuance rules have changed from this to whatever they are now.
So wait, so the ones in black are updates to the white paper?
Yes. Yeah, it's like I'm still trying to like understand this fully too, but it's also it's pretty like in depth, but there's a few like things like it's not as in depth as I'd like for a DeFi open source platform. What I want to see,
our white paper for the Neon tokens, like 5-6 pages, and that's a pretty simple, very simple thing in the grand scheme. Whereas something as sophisticated as a money market with swaps, incentivized lending, or incentivized liquidity yield, and lending protocols, I would expect it to be a lot more robust.
Yeah, exactly. Lending protocols, swaps with automatic market routing, fucking great to see this shit on Wax finally. But what I'm missing here is a list of the actual contracts that we're interacting with, to check those out on blocks. Why those aren't just like pinned somewhere is strange to me. I don't see any audits, which I want to see at least one audit before this stuff goes live, especially for a protocol that's been running for a full year on EOS. So I haven't seen that, and I want to see that. And all those things lead me to interact with this protocol using not my main wallet. So I did use first.ftw which is a hot wallet that I use to participate in drops usually. So I have a few NFTs on here, and then only exposed the money into this wallet that I wanted to use specifically on this platform, and with the caveat of I'm okay if this is a compromise. I'm okay with this wallet being compromised, and I'm okay with these funds being lost. So with all of those things in mind, I started playing with DeFiBox yesterday. Yesterday around noon. I made a few liquidity positions. So a big thing that DeFiBox offers here that is a step up from what we see so far in the DeFi space on Wax is an automated market making routing system where you can, for example, trade one box token right now would give me, damn, what the fuck, dude?
Damn, you made 5 box in like 24 hours?
Yeah, since yesterday. Jeez, that's a lot of Wax.
That's nuts.
Let's see. Marcy, go. She's lazy. Here, I'll pick her up. Go. Eat it. 36 Wax since yesterday. Damn, that's pretty fucking solid. So I was trying to do this to like see like what's the potential yield here in Wax, because my end game is to make more Wax at the moment. So
that's the plan.
That's the plan. So the preliminary overview of the box token tokenomics is that there's 5 million tokens total, spanning all 3 of the existing blockchains. So box tokens should exist on EOS, Wax, and BSC. And
are they wrapped, or are they
that's
the token?
That's where I'm that's okay. Exactly why don't I see the contract addresses, because I can't confirm that like what they're saying is true when I don't see them posting, oh, here's the contract address for box, and then here's where we bridge it over, or here's the contract address for it on Wax, and how those are maintaining. So it's hard. It's what they say. I can't confirm it, but it's an interesting concept. And again, like I said, until I can confirm these things, that's why I'm in the market of making Wax. So
like if the box token natively could be sent to 3 different chains without wrapping it, or engaging with contracts, that'd be a really sweet token utility. But without further information, it's kind of confusing.
And based on what I'm seeing on the EOS side of this, I would not be surprised to see, what is it called? To see like a swap on their platform between all 3 of their products, where you could swap on DeFiBox with box tokens into an EOS potentially position or something like that. Hasn't happened just yet, but I could see that coming up. Let's see.
Oh, interesting. Yeah, I think Lou set up an interview with the DeFiBox people on February 1st, so a week from today. So we also will be sitting down and talking to them at our normal Thursday interview time next week.
Okay, this is totally 37. Yeah, I just claimed my rewards, and I could now earn.
Or actually, be on Tuesday. Sorry, Tuesday of next week. My bad.
Yeah. So the way that the DeFiBox tokens, those 5 million tokens, get distributed, has to do with incentivizing liquidity. Like most of the protocols that were, like most of the DeFi protocols we looked at, like Viper Swap, like DeFi Kingdoms. Even like SushiSwap, Uniswap, all of these protocols fill their liquidity pools by incentivizing that liquidity participation through distributing these types of tokens. So that's what this box token distribution model is. That's where the tokens are coming from. It's like they call it liquidity mining. So you can participate with in the liquidity mining by supplying liquidity to this protocol, which we can do very easily, just like you're familiar with on Alcor. If you click on the liquidity tab here, you can choose the token pair, and then it'll show you what the APY is. And when we click details, it'll tell you the APY breakdown. So this is, since yesterday when I started, I've been like gathering some of the data based on the positions I put in here. And this is not an APY, this is an APR rate. And you can see that they're splitting the total that you're getting here of 365% APR between what you're getting in incentives just for participating in the pool, and then the fees. This is based on the last 24 hours of performance of swap fees collected by this liquidity pair. So when you add the last 24 hours,
cool, they estimate that for you.
Yeah, exactly. Yeah, and then you do that. So for example,
and the mining rewards are paid in box token, correct?
Yeah, and the mining rewards are all paid in box tokens. So for example, if we looked at the neon pair, we'll see it has a 3.93% detailed, what is this, liquidity yield, but you can see that liquidity yield is coming from, it didn't update, but you can see that it would be basically coming 100% just from the fees, and the liquidity mining would be set to 0% here if this would update correctly.
I see, yeah, because they haven't decided to incentivize that pair. So
right. So here I'll just refresh it. There you go. So here you can see the fees are all coming from the trading. So you can check here once you're on the liquidity tab. You can check by cycling through like the different token pairs what is offering a liquidity mining yield. So for example, Fate token is paying a 593%. Yeah, which is why.
How are they deciding which are incentivized? Is that
will be something I'm very interested to ask them when we talk to them. But this is a huge incentive yield, and look at, I own 23% of this fucking pool, so I'm getting 23% of the entire incentive every block, every like couple seconds that this is paying out.
500% in rewards. That's nuts.
Yeah. And so now let's say I want to participate in like liquidity supplying here. You can swap into Fate and then add that to this pool. So let's do that actually, because it'll demonstrate something that this protocol does that no other swap on Wax currently does. So I have my box tokens that I just mined since yesterday. I can now click this box, and you can see that if I go more on details, the swap path is going box into Wax, Wax into Fate, because there is no liquidity pool between box and Fate directly. This trade would not work on Alcor. Alcor can only trade between liquidity pools directly. If you wanted to buy Fate on Alcor, you would have to buy it from the Fate Wax pool. You can't use any other currency. But on this exchange, the automated market maker will route this traffic for you. So here, for example, FWW will go into Wax, into Fate. So
you can reasonably assume like this is where you can decide what the most advantageous pairs are to liquidity farm. So like, you know, everything is going from box into Wax. So you can imagine that Wax-based pairs are the most advantageous, or at least are going to get the highest volume, because the routing is going to go through that way, because obviously Wax-based pairs will probably have the deepest liquidity.
Yeah. And then
so this is to figure out what the best move is. That swap path is where you kind of get your indicators.
Yeah, and this is a perfect demonstration here now of decentralized finance. So I want to participate further in the liquidity pool for Fate and Wax.
Real quick, I was reading the other day that this does not have Wax Cloud wallet integration, correct?
That's right. Only Alcor. I'm sorry, Anchor wallet so far.
Okay.
Let me start from the scratch here really quick. I'll start right now. I'll make a brand new wallet, import it into Anchor, and interact with this. But let me first do the thing I was trying to show here. So I want to participate in this pool because it's going to give me almost 600% APR right now, versus what I would get in the box pool at 365. So I want Fate tokens to pair with my Wax token. Now, if I trade my box into Wax, I'll get 36 Wax. And then if I trade Wax, 36 Wax into Fate here, Fate, and let's say 36 Wax, I'll get 11,371 Fate tokens, because of the available liquidity on this swap currently is causing me to have a 4.25% price impact. Now, at the same time, I could come over to Alcor. This is why I was talking about decentralized finance, because this is a decentralized space. I'm going to go where the liquidity is deepest. So I can come over here.
Baby.
I can go over here and say Wax. Oh, I already have Wax on the other side. So Fate. So let's say Fate token. Here it is. And on Alcor right now, 36 Wax gets me 11,795 Fate, which is actually pretty fucking close.
Yeah, it's only like 4 difference, right?
I'm getting 371. I'm getting, okay, it's quite a bit, like 400.
Oh, never mind. Yeah.
So it's pretty significant. So what I'm going to do to make this happen is I'm going to go box into Wax on this exchange, swap. And I'll get my 36 point whatever here. Open wallet.
Yeah, so like for Harmony, for example, if we're trading between assets, we'll check on Viper Swap, we'll check on DeFi Kingdoms, we'll check on Sushi Swap, and then see, depending on which exchange has the deepest liquidity and the least price impact, you can then decide which routing you want to take. So in an EOS wax space, DeFiBox is an option, Alcor is an option. I think there's one more that I'm blanking on, but anyway, so as the wax space grows, you'll kind of have more competition, and having more competition means more consistent pricing as well.
Yeah, exactly. So I'm going to come over to Alcor. I'm going to log in with the exact same wallet I was just in on DeFiBox. So I'm logging in with first. Now 36 is what I wanted. I can get almost 500 more than I was getting on the other.
It's not insignificant for sure.
Yeah, and now I'm saying trade. The trade goes through. There's my currency, and now I can just jump right back over here. Liquidity, swap into the pair that I wanted to participate in. Fate, add liquidity, and then I could say I click this amount, which autofills the counterpart. So even though I bought this with 36, it's now giving me, I have to only put up 35.6 because of the arbitrage currently going on. I'm going to say confirm, sign. It's making me launch my anchor every time here. So there we go. It's confirmed. And now it'll show up down here in my liquidity position. So now I own 27% of this liquidity position entirely. And I'm earning.
And how much do you have in there? Like to get
not that much. It's 200 wax with the counterpart. 228 wax. It's not deep liquidity at the moment.
That's hilarious.
I own almost 1% of the box thing with only 1,300 wax. Well, I guess that's quite a bit of wax. But yeah, I'm also starting to get into the neon one over here.
And so where is it showing? Does it show in this view like what your APR is?
So the APR I haven't found a nice overview for. So the only way I've seen to do it is by going on swap and seeing it here. And then on the mobile version of the site, it's displayed a little bit nicer. But on the desktop version, it's a little hard to find. So but yeah, you can go through, you could see like it's also going to depend on obviously the liquidity depth. So if you look at TLM, for example, has only 83% and 75% of that comes from liquidity mining incentives, but it's because of how deep this pool is. So the current depth in this liquidity pool is 63,000 wax with the counterpart in TLM. If the Fate pool became that deep, this 500% would probably be like 50%, which is fine. And then the way that you will collect this mining, once you've added the liquidity, that's all you need to do. Once it's here, you'll see it in my liquidity when you're on the liquidity tab on the swap page here. And then when you click these 3 bars up here, there's the mining tab. When you bring this up, it'll show you what your current yield is. So you can see since I just claimed this a minute ago, it's just while we've been talking, I've already made an additional 0.02, which is actually
probably a handful of wax, like maybe one wax.
Yeah, which is actually not, it's worth quite a bit. So this is actually going to be 0.21 wax, like it's almost a quarter of a wax, just since we've been chatting it up. It's not bad.
Before we dive deeper, I'm gonna run the stream raiders real quick.
Yeah, let's do it. And I'll take a dab.
But I do have some questions for you, but yeah, take a dab, take a breather. All right.
DeFi, fucking love DeFi. Moving to wax is exciting me.
God, one of my friends was telling me she went on a date with the guy she met on a dating website, and he referred to himself as Dr. Dab Boy.
Oh no! How did that go?
I think it was all right. Dude, Dr. Dab Boy, just killed me, dude.
Dr. Dab Boy is not. I mean, unless he was trying to be referred to that like as Dr. Dab Boy.
They are an actual doctor, so like they actually have a doctorate. So they are. So I don't know if I don't think they were doctorate in dabbing, but
I feel like adding Dab Boy after doctor just really devalues the doctorate.
Oh man. Yeah. This is we'll just do quick little commercial break. If you smoke them if you got them there. Dab if you got them. Shout out Puffco. Puffco. It's where the puffs go.
Getting high with DeFi.
Getting high with DeFi. Yeah, that is. I really do think that should be the name of your show.
Every day.
Yeah. So here is the current. You were asking about where can you see what's incentivized, Mark?
Yes.
So they do have it in their documentation here, where you can see the allocation of the weight of each pool. So you can see the box wax pool is getting a 2 weight, meaning it has like a 200% liquidity mining yield rate weight for your position. And then the next highest yield will be in TLM, which is only 0.2. So this has about a 20% value weight.
Oh, interesting. Okay.
So yeah, that's essentially how to read these numbers. So Fate, even though it's so fucking high, is at 0.02. And that is because the liquidity is currently so shallow. So when these new protocols come online, yes, there is risk involved with using stuff that's not deep risk too. Sorry, I don't want to like understate the risk. There's a lot of risk involved with interacting with a new product, signing permissions to contracts from a wallet, and interacting with this stuff. But there's also massive incentive to do so, because when you're the first person in this pool, you're getting 100% of the yield from the liquidity mining distribution.
Yeah, and then other people see the incentive, they start jumping in. Every single new person you're capturing all those fees as people try to enter in it along with.
And another thing to note about liquidity mining is that it doesn't matter if people trade Box and Wax token at all. Like this marketplace doesn't need to be used even once in 24 hours for you to get your liquidity mining yield. But when you provide liquidity on Alcor, the only way to make money is with volume. So a liquidity mining position mitigates your risk of an underused protocol because it's based on the time in the position, not the amount of volume moving against the pool. But let me show you how since like you said, we can only get into this with our Alcor wallet. So let me exit.
Oh, real quick, so you have your Box token, and can you use the Box? Can you like stake the Box similar to like a Tranquil, where you stake the Box and you get a reward, or does the Box play into the lending protocol? Like, what do you do once you got Box?
So the Box token is the protocol's like voting share token, essentially.
So it's a governance thing. Okay.
It's a governance token for the protocol. It'll be, and down the line, you'll be able to like help. You know, that chart we just looked at on the distribution, for example, these numbers and these weights would be effectively voted on by Box token holders. So if you're a TLM whale and you want this number to go up, you could do that by owning Box token and voting for this number to go up.
Well, selfishly, we should definitely vote for some Neon Space. I'm just saying.
Yes, I'm very into that, and I have a decent position in Box already. Let's see, I have 1%.
Well, I did another Stream Raiders, so for anyone interested in that, you can jump on in.
And the reason that I jumped into like that Fate position just now with my Box instead of keeping it is that at its current rate at 600% APR, the Box that I just spent to put into that liquidity position, I will make back in liquidity mining in 9 days with that current yield. So the risk is very mitigated currently, but it's also because the yields are so high and the sustainability of such high yields is non-existent, because as more people continue to enter the market, that yield is split with all the participants.
And this goes back to the plan piece too, like you selling the Box as you get it to recover your principal before you do any change is the key for sure.
And that's because I'm not just testing the waters or like seeing what happens if I do this. It's like, okay, this is the product they're offering, is this like liquidity incentive for these positions. So let me make a plan. How do I set up a position, recover my principal from the position, and remove that from this environment, and then grow my position as an investment strategy? Obviously, again, not financial advice, but making a plan of how to approach a protocol, especially a new protocol that you're getting into on the front end, really will make you more successful in your interaction with that protocol.
Real quick, so I had some Wax Neon LP for 2 days once, and I got nothing for 2 days. Why is that? No one swapped. Is this on DeFiBox? Is on Alcor? I mean, effectively, in the context of this DeFiBox, the Wax Neon liquidity pool is not incentivized. So the only yield you would get from that is a portion of the fees of people swapping through that pair. So if there's not a lot of volume swapping through that pair, which I would not be surprised that there is,
so
given
here's
that
the market.
The Wax Neon LPs only existed for like a day, then that would be why you're not getting a lot of volume there. Because most of the people who interact with that do so through Alcor, right?
But it's got to be on Alcor. It's just me and Wapaka here. We're the only liquidity providers on here. You can see it. This is me.
So same thing on Alcor. It would be the volume, the fees or the yield that you get from liquidity pooling is through volume, right? Every single trade you get a portion of that fee because it's like a 0.3 or 0.03% fee.
Yeah, so like a really quick way to understand that would be like if you have a liquidity position of, let's say, one wax is worth one neon, right? So if you put a neon and a wax into that liquidity pool, and then somebody buys, let's say that's the whole pool. Somebody buys 0.1 wax, they would then spend like 0.103 neon to buy that wax from the pool. So now the pool would have 0.9 wax, but 1.103 neon. So now the pool is effectively made that 0.03, but the position in the pool has been offset based on the trading. So it's really difficult to have a straight metric on how to expect yield from a liquidity position, because the yield is in the trading in the opposite direction of the price motion. So if the value of neon is dropping, the position in the liquidity pool of neon is climbing, plus the yield from trading into that position, but its value in dollars is dropping. So there's a very dynamic way to calculate it. It's not easy. It's definitely not something I would recommend as an investment strategy at all. Most people who participate in liquidity providing and yield farming lose money. It's not an easy way to make money, or like just sitting in, like, drop it into a pool and let it farm. There's a lot more to it to make money. And the big way to mitigate these loss risks is doing incentivized liquidity, where you're not just getting the liquidity yield and yield liquidity mining that way, but you're also getting the incentive reward, which again is not contingent on volume, and therefore is a reliable, calculatable counterpart to that risk. But again, that's like a very long discussion of how do you calculate actual liquidity mining risk. And it's yield farming is a very sophisticated investment strategy. I know it's very easy to get into, but it's a very sophisticated thing to do successfully consistently and be making money.
It takes a lot of math to check in to make sure that things are
not passive. Yeah, that's a good way to put it. It's not a passive way to make money.
Pay attention to the math of it to make sure that it really is profitable and doesn't just feel profitable, and that takes a certain amount of intentional effort.
There's like analytics firms that have done like published analytics studies on liquidity mining or liquidity farming that's been happening on the Ethereum blockchain, and the metrics show something like 89% of participants are losing money. So again, like those metrics, I also question a little bit, because I'm not sure how well they're able to factor in how much of those participants are actually using those liquidity positions in other mining opportunities. Again, very hard to calculate and set a standardized metric.
It's all decentralized. None of these things are connected.
Exactly. So it's really hard. So it's like, for example, I have liquidity in like the Wax and the Wax Ethereum pool on Uniswap, right? Effectively, that since Wax, used to be 90 cents and now is like 40 cents, effectively the value of that position is losing money, and I've lost money if you were to look at those metrics on paper. But that position is also earning me a cut of the distribution rewards pool, which offsets that loss and keeps me either at the moment, I think, like delta neutral, or I might be still slightly in profit. But it's hard for somebody looking at this blockchain just at the liquidity pool on Uniswap to know.
If they were only looking at Uniswap, they wouldn't see that the resulting tokens are then deposited in a different protocol, which then pays you in a different way.
Especially the Wax distribution pool, which has like unbelievably complicated tokenomics in its reward structure, because of the way that the Wax G tokens are distributed only on epoch endings where the price of Wax E is higher than the previous epoch. And then if it's not, those wax G tokens are still further backed. So even basically the longer you've had your position in those pools, even if the price of wax is dumping, you're still getting a bigger return than somebody else who's also in that distribution pool who hasn't been in there as long because of your position in wax G. So like it gets very complicated to try to, standardize and calculate that stuff. But
real quick, how do you find a contract address for a token? So that's a real quick one. Like I imagine you're talking about like Ethereum based stuff, or like MetaMask tokens and things of that nature.
If we're on Wax, I like to buy a token is the easiest thing to do for me. So I'll go like, for example, here's my wallet on I have Box U, Box X. I don't even know what some of this shit is. What the fuck? 30,000 Box X tokens, I guess. Cool. But to find what those are, I can go to blocks on my wallet here, first.ftw, and then scroll down and it'll show you what tokens it currently has. The block explorers on Wax are a little wonky as far as like where can I find this information without actually owning the token in my wallet, which is kind of irritating. But to find like here, like this Box X token that I have 31,000 of and don't, or 31 million of and don't even know what it is. Okay, 31 million is not a lot. Wait, hold on. What? There's 31 million of them, and there's only 38 million in circulation. I own 31 million of those.
That seems weird.
Well, there it is.
Wait, where's the other thing? Who else owns it?
Chitter mining. That's okay. This is got to be Box X is the liquidity token for Neon liquidity pool on Box.
Oh, there it is.
That's what it is. Because that's the two of us are the only providers, and I own 80.2% of that pool. We can verify that very quickly by just coming over here. Liquidity. All right, I gotta go into my wallet. So here you can see, oh, they added scat. Oh wow, they're adding wallets already. So you got 3 options now. But and the cloud wallet. What? Hold on. So this is the first step when I'm logging in for the first time with this contract with my cloud wallet, right? I can see it's requesting an address here. It wants to know my Wax account name. Okay, that's okay. So if I'm doing that same transaction, oh, look, you can sign in with your cloud wallet now. So fuck yeah, awesome. Let me just show really quick if we are, let me log out and then do that again. Because if you are signing from Alcor, there's another way to see. Here we go, select wallet. If you're signing in with Alcor, you'll see it'll tell you what the transaction you're signing is before you sign it. So if I want to use first.ftw, then it's saying provide identity, first.ftw with active. Okay, provide identity. All that is giving it is the identity of the wallet. That's okay, I'll send that. Same goes for when you do a trade and it pops up. So if I go to swap and let's say I swap one, let's see if I can do one into Neon. Still too much. Do 0.1. Okay, if I do a swap here, it'll bring up my Anchor wallet, and then in the Anchor wallet, it'll tell you the details of what it is that you're actually signing permissions, which is very useful. So here you go, Eos Token Transfer. Okay, contract information, first.ftw, swap. So it's giving it a memo with this memo. Quantity. Okay, so this is what I expect to see in the quantity. Okay, I'm okay with that. Send to swap.box. Yes, that's fine. And I'm signing with my active key. All of this checks out. None of this is asking for some kind of a permission, some kind of quantity that's more than I'm expecting to see. All of this shit checks out. I'm okay with that. I'll sign this transaction. So there's a little like vetting layer you can do within your wallet before you make any kind of like action, which is kind of nice. So
oh, sweet. You found some audits. Nice.
Oh, nice. Kick-ass. Yeah, I was going to say they must have some. They've been running for over a year now.
Wait, so how are we getting to the point where you can find contract addresses for tokens?
Oh, like I said, I would buy a token, like a very small supply. So let's find
buy like a super small amount, then you can find your wallet on wax.blocks.io.
Yeah.
And then you can see the token in your wallet when you look up your own address. You can buy like a fraction of one. Unfortunately, like there probably should be a better way to do that. But
yeah, that's just my like shitty ass workaround. But here, for example, is Taco Token. If I wanted to find this contract address, I'm just gonna go to market trade, buy 0.01 worth of wax of Taco Token. Yeah, I'll sign it from here. Launch first at FTW, and you can see there was the trade swap, market swap like transaction from Alcor. You could have vetted that the same way. So now I have the Taco token here in my wallet, 0.0035. Now when I'm on Alcor, if you click the number next to your name, it takes you to your blocks.io account page. Now if you scroll down and find your token,
up.
Oh yeah, there it is.
There you go.
Tokens. Now we should find Taco. So now Taco's made the
list.
Click
on that. Then you can see who all holds that token, the total circulating supply, the max supply. Same thing for liquidity positions on Alcor. You can search for like, if you have a position in Wax Neon liquidity pool, you can look in your wallet on blocks, see the token Wax Neon that represents your position in the pool, and then you click on that, and then that'll tell you who all's in the pool at what ratio, how much percentage of the pool, so on and so forth. That's how we figure out the Wax Neon rewards, of which I need to do later. So if you're expecting Wax Neon rewards, I forgot to do it yesterday, so I will do it today.
Here's the Wax Neon pool.
That's how we find the data to do the incentivized distribution.
Here's me in the Wax Neon pool, baby.
Max and Lewis get blacklisted from the rewards, by the way.
Yeah, we don't get our rewards. That's fine. I just want to be in the Neon pool so I can supply some liquidity. I always scoop up the floor too and then just burn into more liquidity.
Anyway, sorry, Mountain Doomy, did that answer your question? Does that help?
Yeah, this is kind of like how I find them. It's a kind of janky workaround, but that's I'm sorry I don't have a better solution.
Yeah. Okay, sorry, back on track.
So it does look like we can use our web wallet now to just sign into the to the DeFiBox. But let's say you don't want to use your web wallet and you do want to start with a fresh one. So let's do just going to wax.blocks.io.
You're gonna make a new FTW wallet?
Yeah, I'll just make a new just from my cloud wallet since that's what people have.
Can you do farts.ftw?
I could. Yeah, I'll make the FTW one later because I have to use like my hardware device and stuff. I want to show how to do it in a way like using a cloud wallet. So here, I'll just log out. So when you first come to this website, it'll look like this.
Oh yeah. Holy shit.
Oh yeah. We gotta go wax.
I'm looking at these audits and they're all like in like Mandarin or something.
Yeah. I saw a bunch of documentation in Mandarin as well, or Cantonese. I'm not sure, but it was not something I could decipher. But again, didn't turn me off from participating because of the incentive. So I made a new wallet or used a wallet that I was okay with exposing to the risk, which is what I'm going to show you how you can do this now yourself. So you have your cloud wallet. You don't want to expose your cloud wallet because you have your NFT collection there or whatever reason. So you're coming to wax.blocks.io. You'll come up here and say login, add account if it has an account already, and then you should be able to choose your cloud wallet here. Again, it will ask for your account name. Yes, I will approve on that. So now you'll be logged into your cloud wallet. Now you can come up here where it says wallet, click the wallet tab, and then say create account. Create account, scroll down, and you can see here's all the things that are involved with creating a new Wax wallet. So it is looking for an account name. For free, you can make any name that has 12 characters. So let's do Max Tech Talk, for example. That's not 12, is it? It's too many. Max.
You need one more.
But that Max Talks Tech.
Oh, damn, that's good. Yeah.
There you go. So now so I gave it a 12 character name and no errors coming up, like if it's not long enough or if it's, let's say, Max Collected already exists. You can't use something that already exists, but you can make any fucking name you want, 12 characters long. So I like.
Don't you pay the base resources to make the account from the account that's seeding it?
Yep. So we're going to do all that right now live. So that's why I logged into my cloud wallet, because I'm going to have to use my cloud wallet to fund the initial CPU, net, and RAM, which
so
it'll
it's
ask you
not exactly free. It still takes that 0.4 wax plus the RAM.
That's not even you can set these to 0 and then it will be free. It's just that the wallet, when you recover it, will just be maxed out and won't be usable until somebody stakes to it remotely. So you can do this. If you wanted to scoop up a name and you don't have any wax, you can still do this.
Okay, that's good to know.
Yeah, so now it's looking for an account key. It needs an EOS key. So here is the key generator. So I'm going to click on this. It'll take me to eoskey.io. I want to make sure that I'm on eoskey.io because that's the official website. I'm on Windows, so I'm choosing Windows.
Do it live! Fuck
it! And then it's going to download this zip little EOS keygen thing for me. I'm going to jump right back over here.
Is there, I mean, isn't there some inherent risk that you're trusting this key generator to give you a private key pair?
The key generator itself is open source, so you can verify the key generator's like source code before you use it. Like this was made by the EOS core team, and they'll even have documentation and audits on it. So I'm just clicking.
I guess my point being, like, be careful on where if you just searched EOS key generator, look into who is providing this key generator. This is something built by the EOS core team, so it's from people connected to the chain. But some asshole could just try and put their key generator on the top of this search, and then they know all the private keys, and then would basically have access to all these wallets. So that is something that you should, just keep in mind. Don't just click any link that says key generator.
Yeah, exactly. That's what I was saying. You want to make sure that you're on that eoskey.io site where it will, give you all the download links, or you can get it straight from GitHub, which is cool too, depending on your comfort using those types of platforms. But I now have my keygen open. Let's see.
Do you want to not share your screen?
No, I was trying to share how to make this all the way, right? That's fine. Like if the wallet's compromised, that's fine. That's just funny to me. Max Talks Tech can just be a compromised wallet. So let's see. Let me pull up the keygen. Not this.
Yeah, you're right. There is a key generator built into the Anchor wallet software as well.
Oh yeah, that's true. Yeah, you could use that if you want. So if you're trying to generate, like basically all I'm trying to do here is click on generate and validate keys. Click this generate button, and that'll, for me, create here a public and a private key pair. So now I'll take this public key, double click this, and Control C for copy. I'm going to minimize here, and I'm going to come back over to my Max Talks Tech wallet, and I'm going to say new public key. I'm going to paste this one, and then I'm going to do the same for the active. So active and owner, you can split the owner and active keys. Active is the one that you're going to be recovering. So for sure, you need this public key into your active side. If you want to do a multi-sig wallet and split the owner key, that's too complicated for right now and not really necessary to get into it. So let's just do the same key for both. Max Talks Tech. And then I want this to have, like, let's say 5 wax in CPU. And now I can say create wallet. And then it'll tell me in my cloud wallet here, I'm creating an account, new account, Max Talks Tech owner. And it'll, like, if I click here, it'll show me all the, like, codes and stuff. So you can verify this is what you're expecting to see, but it is. And I should overdrawn balance. Fucking 5 wax. Okay, whatever. I'll just do 1. I must have 1. Let's try that again.
Oh,
I haven't checked
how the mighty have fallen.
I know, right? Let's see. Do I not have 1 wax? Hold on. I gotta check that. My wax balance. Here, let me send myself some wax. So I'm using ojub2.wham. I'm gonna open up my Anchor wallet. Just go to wallets. First, that FTW has some wax. Let's see. I could do 2 wax from here to ojub2.wham. Let me double check that that's the right spelling. OJUB2. I'm looking up here. Yeah, that's right. So I can say transfer and send. Okay, so now that there's 2x in here, create account and approve. Success. So once you see the success hash, you can now go back to the key generator and copy the private key, which I have right here. Control copy private key. And now I'm going to open Anchor again.
So like for context, a lot of people like to do Anchor hot wallets for like drops, for example, that they have an empty wallet, they give it some CPU. It's and particularly for minting events and stuff, if you are worried about security, that you could have this hot wallet that's only for drops. Doesn't use any CPU for any transactions other than buying drops. And so in that way, you can kind of try to put your best foot forward on, buying drops that may sell out really quickly, and then just move the NFTs from that drop wallet to a cold wallet. So that is like a strategy that a lot of people do, as far as having like why you would have multiple wallets in your own like kind of ecosystem here.
Yeah, exactly. And you can make a hot wallet without funding any assets to it, and then just remotely stake from a cold wallet to give it like thousands of CPU if you wanted to, without that wax actually being exposed inside that wallet. So you can make a wallet that's funded from a different wallet and basically has nothing exposed in itself. So the way I'm adding this wallet now to my Anchor is I'm hitting the wallet dropdown up in the center and manage wallets, and then saying import account, import existing account, import private key, and then I'm pasting my private key here, and it'll find the active and the owner key associated with this. So I'm going to choose the active because that's going to be the one I use to sign transactions. Import, and then my local wallet password. And now that I've done this, I have Max Talks Tech as a wallet, and anybody who freeze frames and then like copies down the private key that we had on stream a second ago can recover Max Talks text into their own Anchor now if they wanted to. But now
it's not ideal, but shows the point.
Yeah, it shows. Yeah, it's definitely compromised, and you can see it says it's hot, but here it is, Max Talks Tech. So now I can change into this wallet. And now that I have this very fresh wallet, brand new EOS private public key pair, now I can come to this very fresh exchange, select wallet, Anchor wallet,
token pocket. I'm familiar with that. That's interesting.
Here we go. And now it'll ask, what are you up? Max Talks Tech, active key, sign in, provide identity. Yep. And there we go. Now I am on DeFiBox, logged in with my new wallet. Nothing is exposed to risk other than what I now send to Max Talks Tech. And when I participate in liquidity providing positions or anything else on this platform, it will be only with stuff that I've exposed specifically to this wallet. So yeah, that's a very cool kind of little overview of how you can create a wallet from scratch very quickly. And
just having custom wallet names is fun.
Yeah, exactly. Oh, and then like really quickly, I guess I could touch on the custom wallet name. So you can make any wallet with 12-character name that you want at any time, as long as it's untaken. You can totally like, spend hours and hours just claiming thousands of these if you want to. And you can always sign.
It's fun to like compartmentalize your NFT collection if you wanted to, or use it. Yeah, you can have a wallet that like, say you only use for a particular game. Like you're not, I'm just signing constant transactions for this game, and like, smart contract failure is still like a potential risk for me. So like if I'm doing, say, blockchain RPG or whatever, insert like play to earn game here, you could have your wallet simply for that. And so only your assets for that game could only be exposed to interacting with the game. And so those are some use cases as to why you would have multiple wallets. And since it's very low cost to do, depending on how you use these wallets, it's kind of a nice way to mitigate and spread out your risk, depending on how you engage with these wallets with different smart contracts.
Yeah, exactly. And then it's also cool to just like have, be like, oh yeah, send it to Max Talks Tech. Like it's a lot easier than like some random string. Like I already forgot OJU B2.wham. So it's kind of a nice like human legible element. But if you wanted to go further than making this 12 character one, if you come up here where it says wallet, there's this more button, and then it opens up the
the
name bid. And then you can come here to see if you want a custom name like the .ft, like the FTW name that I have. Custom named wallets allow the owner of this name to create any wallet dot whatever the custom name is as well. So for example, here somebody's bidding on Gene or Genie or whatever, I don't know. Or here Kit, for example. So Stuck at 6 p.m. right now is the top bidder for Kit. The way that this bid cycle works is you need to be the top bidder for a full 24 hours. If you are the top bidder for 24 hours, your bid is approved and it switches over to needs to be claimed over here. And then the next top bid will become the top bid and the 24-hour cycle starts over. If at any point somebody puts a higher bid in, not even for your wallet name, just for any name, the 24 hours restarts.
Yeah, so even though you're the only bid on your particular name, you have to beat out everyone else bidding on their own names. So like we ended up accidentally getting in a bidding war with Metaforce because we were trying to get the .neon extension and they were trying to get a Metaforce extension or something like that. We were both trying to get it at the same time, so we kept trying to outbid each other to try and be at the top.
Yeah.
So it's people trying to snipe Meta when Facebook announced that they were doing.
I initiated that. I put that first bid in for Meta with my wallet, and then immediately got like outbid by Van, and then Worker came in with an even higher bid. But Worker is somebody who like here, if you scroll down, there you go, worker.wax. This guy just like buys every name.
Yeah, I think that's someone that works for the Wax Core team or something. Yeah. Wait, so what if you win the bid and never claim the name?
So that name is taken. The name won't be claimable by anyone else. When you win the bid, so for example, this Kit, right? The name Kit would be if Stuck at 6 p.m., the wallet name Stuck at 6 p.m. would then own the right forever on the Wax blockchain to mint the wallet named Kit. If he never does, that's okay. Nobody else can ever own that right. But he's not forced to. He now just owns the right to. Meaning that if, for example, he were to buy the name Kit and then Knight Rider wanted to buy the name Kit from him and he hadn't actually issued it yet, Knight Rider could provide him with an EOS public key. He could mint the name to that public key and they could then recover it from their private key, which they never exposed to anyone. And effectively, he could sell the names that he buys without having to use them personally. The other side of this was this is the winning bid wallet wins the right to make the name that they won. And then the named wallet owns the right to mint further wallets with the dot of itself extension. So any like Stuck at 6 p.m., if you make the Kit wallet, will then be able to do like stuck.kit if you wanted to, or even just like 0.kit or whatever. You could do anything .kit, no character length.
Yeah, so for the Neon extension, for example, there's the Neon itself is one wallet, and then we made new wallets from that. So airdrop.neon, give.neon, all the other .neons that we've been doing. But you can't just use the base itself as a wallet, correct or no?
Yeah, for sure. Yeah. So like for example, the first FTW. FTW.
So FTW itself is also a wallet.
And then I also own just FTW, this is also a wallet. So you could send Wax or NFTs to just FTW, and it would, I would be able to interface with this wallet. So if you wanted your wallet name to just be like I doubt it's still available, but I could buy the name Max and then be like, yeah, my wallet is Max. Just, hit me at Max.
That's pretty wild.
Yeah. And then not only would I be able to do that, I could also then be like, oh, you could be Mark.max, and I could make that.
Yeah, so this is in this case you would not be beholden to the 12 character limit.
Yeah, once you own a custom wallet name, the custom wallet has the ability to make any character length names as long as the end is dot whatever its extension is. So for example, like there's some longer names here, like the Gazers. He could make Yoshi Drops could make the Gazers wallet, and then you could make like 5 dot the gazers if you wanted to with this wallet. But also, once this wallet is made, you can't make custom names that are exactly 12 characters that end in this either. So for example, if you came up with a name that's exactly 12 characters and ends with .ftw, you won't be able to make that name. Only I can make that name, even though it falls into a 12 character length name, which is also
interesting.
Yeah. Like, for example, airdrop.neon is exactly 12 characters, but you would not have been able to make that without the Neon wallet.
Oh, okay. I like that.
Yeah. So, but that somebody could have done that before the name Neon was bought. So when a wallet is created, the blockchain is queried to see what name is available, and that these purchased extensions make names with that, dot hits, for example. You can't do that anymore.
Oh man, that's so funny. Look at worker.wax trying to get all the misspellings of wax on Binance.
Wax on Binance. Yeah.
Oh,
that might just be to like give it to Binance though, but yeah, it's definitely sus.
Bitex. Just people are just trying to create scam accounts basically to get it closed so they can
damn, Metaverse. He paid 11,000 wax for that one.
Oh man, Star Wars for 900 wax. That's a steal.
Fucking hell, dude. Yeah, what a get.
I bet they're gonna do a Star Wars Funko. That's probably what it's for.
There he is. They outbid me on Meta, but it wasn't not that much money, I guess. At the time, this was like $3,000 though.
Oh, nice. Crypto Mooney got Mooney. Good for him.
Yeah. Yeah. Yeah, it's fun. You get to see all like the who gets what and USDT. Grifter King.
Grifter King. What is that, Graffiti King? I bet it's Darren from Graffiti King.
The Grifter King now. That's funny. Let's see.
All right. Well, I feel like we could probably start wrapping up here. We're going on about 2 minutes here. So
it is fun though. Oh yeah, this is the other thing. You can do
Raiders here, and
you can do individual numbers too. It doesn't have like if you buy the name, you could literally just be number 1.
But I feel like there's some new people that have come through the Tech Talk, so we're always available on Discord if you want to talk shop about these things. We love talking about this stuff. I mean, when we go off air, Max and I will probably talk for a while about DeFi positions and incentivized mining and stuff. So we love doing this kind of stuff. So if you have like a more individualized question, feel free to ask on Discord or DM us or whatever. So we're always open to these things. But
to what DNA is saying, by the way, watching 30K wax for Wizard, right? Insane, right? Why would they do that? Like, what would make Wizard that worth that much money to somebody who clearly understands the value in those names, such as worker.wax? And like I saw, for example, Worker.
Oh, interesting. I thought it'd be like the Blue Wizard.
I saw shit like Spider-Man get bought by Worker for like an absurd amount of money well before they announced this.
Yeah, we saw that months and months before they released the AMC No Way Home thing.
Keeping an eye on those name bids and who's buying them and what names people are shelling out insane amounts of money for is a fun way to speculate.
Yeah, that's true. I mean, it's just like Lewis says when he follows like whale wallets, he tries to see what Van's doing or like see what Versus is doing and stuff like that as an indicator of what the next thing is. Seeing what wallet extensions are being bid on is a kind of interesting idea to see where
the Spider-Man one was pretty fucking interesting.
Some of the new collections are. I think WSOP came out a few months ago too. People started speculating on that, and then the World Series of Poker stuff got added. I was pretty disappointed by that release, by the way, but
yeah, same. That's pretty weak. But yeah, it's really cool, I think, to be able to see all this stuff on chain, and it's a fun little like insider scoop of like what is being bought and what like when the Spider-Man thing sold, that had been on bid from Worker for 600 wax for like months and months and months, and then suddenly he like outbid himself, and I was like, oh shit, like something's happening here, like, so that kind of stuff.
Oh man, yeah, it's like it is funny that you can kind of see, I don't know, it's like hearing and seeing some of the gossip on chain, but you can see it all through Block Explorer.
Yeah, I wonder what the Wizard one is for. Like that, I could also just be like he's gonna vanity try to sell that to the Blue Wizard,
Yeah,
because there are people with like deep pockets from like ill-gotten gains that'll spend absurd amounts of shit on like nonsense.
Yeah, I know Burst has talked about wanting a tool to see all the trades that happen on chain, so he can kind of see not only the volume of collections being bought on the aftermarket, but also what people are trading, just to show what collections are being engaged with the most and what collections are being utilized the most, to what you're saying, Smurf. So I agree with you. That is the cool part about blockchain, is the fact that, you have all these tools to educate yourself if you like, and there's no real gatekeeping.
Yeah. Do you know if Wizard? Do you know about the Wizard connection with NBA that DNA is mentioning? I'm not familiar with that.
Sorry. Isn't Wizard something from NBA trading cards? I
know Wizards of the Coast is like a trading cards thing.
Yeah, honestly, I'm not familiar if that's like an NBA thing or not, to be honest. Yeah. How can you create your own bid for a name? So like when you're on
awful lot of whack for a name.
When you're on Blocks Max and you go to this name bids, I mean, you can just add a bid there's basically like a little interface here. I'll show it real quick. Like
it's very easy to put in a bid, and the cool thing is like you don't have to put in the top bid. You can put in a bid that's like below whatever, and then whenever those bids clear, you will eventually hopefully be the top bid. And like if you
really, I didn't realize Wizards of the Coast got into sports stuff.
If that's Magic the Gathering, I'm gonna fucking like be all about it.
Oh my god, dude, I would lose my shit. So basically here at the top, so you go up to more on blocks, you go to name bids. And then up here, it's just your account name to bid on, and then the amount you want to start the bid, and then it just adds it. But you can get caught in limbo. Like if you put up your bid, but it's a small bid and you try to get it for 20 wax, you're never going to get it because you need to be the top out of all name bids. So
there's
you can
no way to cancel it
forever.
Yeah, you can't cancel a name bid. The only way to get your money back is if somebody outbids you. Then your money comes back to you. And otherwise, the only other way to close a bid is to win the bid. There's no way to like redact your bid once you've placed a bid. So, like for example, I think Worker has a pretty fucking hard floor at 600 wax. But if you have a really name you really want, I feel like putting a bid in at 601 wax is not unrealistic to expect to get that bid filled within the next like 6 months.